All right. Good afternoon, team. Good afternoon. Good afternoon. I hope you're all having an amazing Sunday so far. I hope you had a great weekend and you're ready for a busy week, I would say, because we do have Powell and we also have, we got to be aware. Most importantly, for this week, we have to be aware. And I will discuss shortly. RRB CEO, thank you so much for being here. Good evening. Red Bullish, good evening. Jorge, good evening. Christopher, good evening. I hope you're doing well. Hopefully, you're ready for this week. Miss N, good evening. I hope you're ready for this week. Let's have an amazing, successful week ahead. Mariapan, good evening. I hope you're having a great time on your weekend and you are ready for this week. iPhone, good evening. Aggie Mom, good evening. Um, Awesome to see you all in here. We're going to, I actually forgot to pull up the economic calendar. We do have Powell speaking tomorrow. We have Powell speaking tomorrow on Monday after the market closes at 1:55 p.m. He'll be talking, and whatever he says is really going to be key for the rest of this market. Let's take a look at where the market is currently standing at. This is the S&P 500. We have broken the resistance line of 563.87. And the reason why this resistance line is important is because, as we can see from the last year's trading, we are simply trading above historic all-time highs. We just placed new historic all-time highs on Thursday session at 574.71 and sold off. And so far, it's looking like bulls are running out of steam. So heading into this week, for the next 2 weeks, we do want to be careful. We want to be watching the market for both sides, expecting the market to also have a pullback possibility, and just being ready on the sidelines so that we can pretty much be ready to trade both sides. Try to go into this weekend with a neutral thought process. This is what I'm doing for this week. I'm going to be neutral on both sides and looking for opportunities on both ways. And the reason why is because after going through the entire watch list over the weekend, I could not find a single good setup. I did find maybe a few that were good, but that was about it. And those few, I would usually call them B minus trade setups, not even A quality trade setups. So that is definitely concerning. And when this does happen, it means two things. The market is either going to consolidate for another week to try and create that wiggle room, or the market will have a pullback to try and create some wiggle room and then come back up to these levels of resistance in the upcoming weeks and then head to new all-time highs. So in this case, what could be what is something that we can expect? Well, we could possibly start with a breakdown below that very mini trend line that we have been maintaining, this uptrend line. So if I drew this line on the daily chart, and if I go in the 5-minute time frame, we can see that we have been respecting this uptrend line this entire time, and we have been holding really well. We are losing the trend line. Let's say, for example, we did lose the trend line over the weekend, and on Friday session. However, over the weekend, we just came right back up, and so far we are back above it. So are we going to lose this trend line tomorrow? Or are bulls going to gap up, get back above 572.40, and then have a rocket move up and finally break out? We will find out. But I would like to note that it's very important that you do hedge your positions here. Okay, team? If you have not already closed out a lot of your positions by I would call it de-risking, because you're basically de-risking your positions, meaning you're taking some of the risk off by either cutting your positions in half, or by trimming your positions all around, or perhaps selling large amounts of them at these levels now that you're greatly profitable, so that you can buy back again once it's cheap again. So looking at the S&P 500 here, this is what I will be watching heading into tomorrow's trading session. First of all, on the smaller time frame, I'll be looking for that uptrend line. And the reason why this is so important is because on the 5-minute time frame, heading into tomorrow's trading session, as I'm observing, if I see them losing that level of support and then closing below the prior day candle, low, I'm going to be very, very confident in trading the put side with the momentum side towards this gap fill here at 561.47. So with any weakness that we sense up here below 570, we can target 561.47. This is where the gap is. And I feel like as soon as we do retest that level, this is when bulls are going to show up. And what they're going to do is they're going to turn that 20 EMA line into support as well as this resistance level. So this is a very, very normal behavior for the market to do, where it will try to break out, right? It will have the momentum to break out. As we can see here, we have been grinding every how many days? 1, 2, 3, 4, 5, 6, 7, 8. So 8 trading sessions up here, and we've just been unable to see new highs. And when this happens, this is a clear indication that the market is possibly weak and needs to sell off a little bit so that it can collect some liquidity. So what does it mean to collect liquidity? What that means is it's basically it's going to go for a retracement to the downside, retest the 20 EMA line, shake out the weak hands, the sellers here that are making this trend a bit unstable, and this sell-off is going to create opportunity to exchange those weaker hands with newer buyers, and that's going to further strengthen the trend. And when we do come back up, this is going to be easier to break out because this time we do have the liquidity. So liquidity is very, very important. And as a trader that does observe the markets on a day-to-day basis and does try to catch these amazing momentum opportunities, I usually just based off of my experience, you guys, I usually just do what I said, which is either waiting to see if we are going to get a pullback, or into Monday's trading session, we will clearly show momentum that we are wanting to push higher. So in this case, if we do, let's say, come up to the intraday line, if we do come up to 572.50, this is my ticket to go long towards 574.50 and even 580s, because that's where we would be heading if the market does hold here. So are we waiting for Powell to speak? Are we waiting to catch some liquidity to the downside? Or are we simply just pushing higher one day at a time, and then we're going to get a big green day one of these days similar to that one right there, and then trigger that upside? We don't know yet, but we will see heading into this week. However, I do really want you to keep in mind that based off of my experience, this usually does sell off. And we will end up catching that liquidity to the downside, because if I were to show you, we can go back to the history of these uptrends, and never ever do we see us being so overbought from the 20 EMA line and then just advancing higher. That just does not happen. So for example, we can take a look at it right here. We're away from the 20 EMA line. We're trading up here, consolidating. But because of the small candles there, we just end up selling off, creating that liquidity. Same here. The candles are very small. We pretty much, what we do is, now that one is a bit different. This one's a breakout, okay? This one right there is a breakout. So what I mean by they could go for a possible retest is they could do something like this. The same way that we have broken out, they could go down, retest the 20 EMA line, create that liquidity. So if we do see, let's say we get some sort of pullback this week, right? By the end of the week, let's say on Friday, we get a nice green candle like that, right above that level of resistance, the same way we are trading. If we do something like that, I'm going to be very, very confident to buy the dip off of that bullish hammer reversal, because that would turn that level of resistance, which is the breakout, into support, and that would trigger it to pretty much go higher from there, with demand overwhelming supply, with us easily breaking that level of resistance the same way that we did there. So are we going to see something like that this week? I think the chances of that is quite high. So I'm very excited. I'm very excited, but at the same time, team, I'm careful and I'm aware that I'm not going to be buying up here because the chances are 50-50. And here's what I mean, team. Here's what I mean. Um, these usually these market conditions is what usually affects traders, and the way that it affects traders is because they think oh, the market's slowing movement, it's not doing much, I'm going to increase some sizing on my positions. They increase some sizes, and now the market finally starts to dump, right? It finally gets that dump below that trend line, and before you know it, traders are adding size crazy, averaging down on their positions, and now the market just sells off all the way with one red candle, goes all the way down to the 565s, and then overnight just gaps down over 561, and just in a day and a half we have reached that 561 level like nothing. And a lot of traders end up losing because they don't take this serious right here. They don't take these market conditions serious to the point of waiting it out. Sometimes waiting it out is really very, very important. As a trader, having that discipline is very important. Knowing that it's a seller's market, or knowing that it's some sort of market where you are pretty much consolidating and you're collecting liquidity. You can't be a fool and pretty much expect to make profits without having the high possibility of becoming liquidity for that given scenario. So we have to be careful. Some weeks where it's going to be a seller's market, some weeks it's going to be a buyer's market. What does it mean to be a seller's market? This means that investors or traders are going to be collecting premiums by selling calls or doing whatever to try and collect premiums on the sell side. And then there's days, and that's usually during very choppy conditions, and then there's days where it's a buyer's market, meaning that premiums just continue to gain because of the trending market. So we have to take that into account. Yes, we are setting up for that potential trending market, but there is a problem. The market is just very overbought, and all of the sectors are just looking very, very overextended. And there's not really a particular sector that can potentially lead, which is the concerning part. So in this case, I would like to observe for this week and see what happens. Well, are we going to get some sectors? And I have some very interesting theories, team. Okay, so what are some stocks that could potentially be leading this this possible market uptrend, or could be continuing this possible market uptrend? I'm going to give it to you straight away. I'll say it, Nvidia. So Nvidia is one of those stocks that is just sitting right at its breakout. So is this stock going to print a massive demand candle there, a nice green candle like that, and pretty much trigger that breakout formation from the downtrend? Because I'm going to lighten up this line here so that the team can see better. Give me one moment, please. So team, we have this uptrend here, okay? We have this breakout here. We have this possible breakout here, or we had this breakout. So basically, we had this breakout on Wednesday session, Wednesday and Thursday. What we ended up doing is on Thursday session, we did go higher, retesting that level of resistance right there, and just sold off. So the reason why I mentioned Nvidia right here, and why Nvidia is such a crucial key for the market, is because this is where it's sitting at. It's sitting right outside of that downtrend, but with just a penny above that downtrend. And that's a bit concerning because it is sitting right on the verge of this cliff here. And we don't know if this is going to basically reject this downtrend here and just sell off all the way down and retest 109 and even go lower, or are we going to just consolidate here, turning this level of resistance into support, print a bullish engulfing or a demand candle back up above 125, and then go for that rocket move higher? This is what we are going to find out this week. The data is going to be present to us. Pretty much however the market behaves, we're going to take that data in. And if Nvidia does print that green candle, we got the green light for the market to continue to push higher, because we will have a good leader, a good market leader that does have the liquidity and can continue to lead the semiconductor industry, so the semiconductor sector. Now, let's take a look at another stock that's sitting right on the verge, Microsoft. So Microsoft is one that could trigger a lot of market momentum to the downside. And the reason why is because, as we can see here, we have been going from support to resistance. Created resistance there, came back to support, established support, then established resistance there as well. And so far, we have been pretty much consolidating right here. We have been somewhat selling off, and bulls need to step in on Monday session. Okay, team, as we can see right here, we are trading right at the level of support. If we get below 427.04 on Microsoft, this is going to sell off really, really, really hard with very, very overwhelming sell momentum. So are we going to do the same thing like I said with Nvidia, where we print a bullish engulfing there and pretty much close the session, close the daily candle above 435? If that turns out to be the case, that's the bullish scenario. Okay, team? If that turns out to be the case on Microsoft and we get a nice green candle like that on the daily chart, this is something that I would like to see so far. Does that make sense, team? Do you see why we need to see a demand candle like that in order to expect this market to continue to go higher? So the reason why we
Yes.
would need that reversal, perfect. The reason why we would need that reversal there, team, is because this candle would say, you know what? Okay, what we are getting there is a rally base, and then that's going to lead to another rally, sending us towards those levels there, the prior historic all-time highs at the 468 area. So if a candle like that does end up being printed on Monday or Tuesday session, then this is something that would look promising for the overall market to continue to advance higher. If that doesn't happen, and instead we get below 427 on Microsoft, with Microsoft very clearly showing momentum on Monday session, be ready for that market dump. And the way that you can trade it is, you can trade VIXY. We can see VIXY, which is this is the opposite of the market. When the market goes up, this one goes down. When the market goes down, this one goes up. And we can see this is really looking like bulls are stepping in for some hedging there. So this one right here, and then we got UVXY as well. UVXY, same thing. It looks like bulls are stepping in there, and could be time for some hedging with investors basically de-risking their positions and starting to hedge their positions for a potential pullback. You can also do SQQQ if the market does end up selling off. Now, if we take a look at QQQ there, team, the reason why I did show you Nvidia and Microsoft is because if we look at QQQ, it honestly doesn't look too bad, okay? Despite the overall market weakness, it doesn't look too bad, because what I am seeing so far is that bulls could be eating time off the clock. What does it mean to be eating time off the clock? It's when you have a clear level of resistance breakout, you're trading above a level of resistance, in this case, the 484.37, and so far you're just simply digesting and waiting for the moving averages to catch up. So you're waiting for this moving average to catch up, and once this catches up and you're very close to the moving average, let's go to the times where the market has been in an uptrend. You see how sometimes, like, we get these expansions and then the market pretty much consolidates sideways, really waiting for that moving average to catch up. And then again right here, when we get that pretty much expansion from the 20 EMA, no matter what the market does, it just cannot create a lot of room to the upside, because it's already up so much. And if you know the universal laws of demand, the higher the price is, the less the demand is going to be. The lower the price is, the higher the supply is going to be. The lower the supply is going to be. So that's good. But yeah, we can see right there the 20 EMA line pretty much regained, and then we had an expansion. Same thing with here too. Although we were in an uptrend there, we did sell off a little bit, but this is what I mean. Okay, when I was talking about SPY earlier, this is what I was expecting. So this is something that we need to see off of SPY as well. One of those candles, they're telling us that, so if let's say the market does sell off, okay, if the market does sell off and then we come down to the 563 level again, I would like to see that candle, something similar to this candle right there, showing us that there is demand. And that's the candle after that, which is the follow through. That's the candle that we will be trading. So once the next candle goes above 451.44, that's our trading ground, and we're going to trade that because that's telling us that bulls are there and the reaction is there. So right now, you see how we are very far away from the 20 EMA line there, team. We're extended. We just need to get that pullback, and that would be a good retest for us to buy the dip on, and then expect the markets to go higher if the momentum is there. So now looking at QQQ here, I'm expecting the same thing. So I'm expecting the market to really try and hold this level of resistance, turning it into support. And even if they go down to that 20 EMA line, as long as they create some strong bullish reaction like this candle or like that candle, that to me is bullish, and I would expect them to continue to push higher from there. But I'm not really expecting QQQ to go down to its 20 EMA line. As long as bulls hold 484.37, I take it as a bullish sign, because QQQ is the ETF that is currently showing strength, and it could honestly lead. So this is what I will be looking for on QQQ. So to put it into numbers so that you guys can trade it, below 484.37, we do not trade QQQ. Okay, team? Below 484.37, we do not buy a call. Understood so far? We do not participate in a call if QQQ goes below 484.37. Matter of fact, as soon as it goes below that level, we are going to cut our trade and get out of that trade right away if we are in a call. So far, so good, team. And now, what is the level that I'm going to buy puts on? 479.88. You can write this down somewhere if you want. 479.88. Once we go below that level on QQQ, oh my God, the selling pressure is going to be beautiful. We are going to get some heavy selling below that level of support. So let's go in the 5-minute time frame. What is that level of support that we are expecting to get a lot of selling? If they go below this level on the 5-minute time frame that I'm showing you at 479.88, that will send it all the way down to this gap fill here at 471. So that will be a nice $10 drop. Okay, team? A nice $8 to $9 drop. Who knows? Maybe we'll go even lower from there. But our first target is going to be that gap fill right there. So far, so good, team. So again, I'll repeat it again. Above 484.37, bulls are in control, and they're going to continue to push higher. So how am I going to know that bulls are indeed in control? Well, heading into tomorrow's trading session, if you see behaviors like this where bulls are clearly closing above the 20 EMA line, and they're clearly above 487.60, this tells us that bulls are in control, and they're going to push up towards this level of resistance at 490 and then 493, with their main target at 498, which is the prior all-time highs there. 503. So that's the level. Matter of fact, there's a gap at 496 that I think will be filled this week if bulls do hold above 484.37. Now, if they get below 479.88, that opens the door to the downside, the plunge to the downside for those big drop days towards 470 to 471, which is the gap fill down there. Okay, team? So are we going to fill the 493, 496 gap, or are we going to fill the 471 gap? Well, below 479, we are heading towards 471. Below, above 484.37, we are heading towards 496. So far, so good, team. Now let's go over the S&P 500 levels one more time. And so again, for the S&P 500, this is the level that I'm looking for. This one right there, which is Friday's lows, okay? If they go below 569.85, again, team, write this down because I swear this is exactly the levels I'm going to be trading heading into tomorrow's trading session. I am not going to remove these levels on my chart. Below 569.85, I'm going to short all the way down to 461, okay, team? All the way down to 461. So below 569.85 heading into Monday or Tuesday, I'm going to trade this move all the way down to 561. And the way that I'm going to trade it is I will be trading the momentum to the downside with SPY put, and I will also be looking for other puts on other stocks that are showing weakness, as well as buying hedge positions to hedge my long-term shares, my long-term tech shares with SQQQ, or I would be buying VIX, VXX. You would be buying one of these derivatives, one of these hedged ETFs, leveraged ETFs, so that you can catch the downside. Now, there are more ETFs that we can take a look at. If we go to, give me one moment, team. There's a lot of leveraged ETFs that we can take a look at, but I'm telling you, VIX, VXX, UVXY, these ones usually go up 10, 15, 20, 30% on the days that we get those $10 drops on the S&P 500. So if that turns out to be one of those weeks, team, you better be ready. You better be on this share, on this, because the chances are they're going to drop maybe 5% or whatnot, but you're going to get over 15 to 20%. So the risk to return is definitely there. And if anything, remember, this is a hedge against your long position. So if your long positions go up, it's okay to lose that little bit of amount on your hedge position, such as VIX, VXX, UVXY, SQQQ, or any other leverage product that you do use to hedge your long-term shares. Now let's take a look at the S&P 500. The levels that I would be looking for on the S&P 500, again, below 569.85, I'm expecting the plunge doors to open with the sell-off extending all the way down to 561.42. Okay, team? Then what we will need to see from there is we will need to see a bullish hammer reversal, a demand reaction, turning this level of resistance into support, and that will tell us, hey, now bulls are ready and they have the liquidity to try and push back up towards 574, and then this time break out to new historic all-time highs, just like we do every time. So we can see right here, we got that mini pullback, new historic all-time highs. There has been other times as well where we have gotten that mini pullback, and then we have advanced to new historic all-time highs. You see right there also, team, there was a little bit of that sell-off. We went up and then came back down. And same thing that I'm saying here, team. If something like that happens on the S&P 500 as well, where we are trying to break out and then we fall back in, what I would want to see is I'm not going to enter off of these candles, okay? I'm going to enter off of a candle like that. This candle reaction is what I would like to see if the market is going to show that it is going to see new historic all-time highs. This is the candle that I would like to see heading into this week or next week on the S&P 500 to show us that we have the base ground to push higher from there. Okay, team? And so far, I just don't see that candle. I just see candles getting very, very small. And although I do love the fact that bulls have been maintaining higher lows and higher lows and higher lows and look like they may be stepping in any day to get that massive green candle, it just doesn't look too promising because it looks like we don't have the liquidity to try and push higher. So in this case, I would like it to pull back to these levels, and that is going to reset some of that and bring in new liquidity to the markets. Now, let's take a look at some stocks here, team. I would like to take you over the default list there and just show you what the overall market is doing. So looking at Apple here, Apple's another very, very, very important, crucial level here. So Apple is trading inside of this consolidation zone there. Now I could do this too, team. I could go ahead and I think this would be the more proper consolidation. So Apple is consolidating between 224 to 229 inside of that defined range. So we have been breaking out of this bullish symmetrical formation, and it does look like bulls can step in soon and try and break out. So like I said earlier, Nasdaq, which is the leading market, pretty much it's what's leading the market right now. It needs a leader, okay? It needs a leader. Either it be Nvidia, Microsoft, or Apple, or it could be all of those stocks. It could be that entire sector with the entire market pulling back and that entire sector pretty much balancing things out and pushing Nasdaq and even balancing the S&P 500 from not going lower from the other sectors. So that will be really nice to see on Apple here. Now, do keep in mind, team, if Apple does go below 225.50 heading into this week, you should know this will be a double top right there, and we can sell off to fill the gap at 220 and even head down to retest 213 again. So do keep an eye out on Apple. Don't be in a bullish trade below 225.50, and don't be in a bearish trade above 229.98. Now let's take a look at SPX again. SPX, same thing, team. We have that breakout from SPX, and I'm telling you, the overall market is definitely bullish, okay? However, I think we may just need a little bit of liquidity. Once we get that little bit of liquidity and then we come back up, I can tell you for certain I'm going to be the most bullish out of everyone, okay, team? And this is something that I've learned over the years, experience-wise, is to really learn to wait these market conditions out. Let the market print those data for you instead of us pretty much entering the trade and then hoping for the best that it works out in our favor. And I don't think that's just not a good healthy approach. Instead, we want to be reacting to it, and we want to even something else that I've learned, team, is that fear is much stronger than buying, so much stronger than greed. So if we do see this rising support trend line being lost, I want all of you to draw it on your chart. If this is lost heading into tomorrow's trading session, you can expect a lot of selling all the way down to this gap fill here towards 561, which is a big drop. If that trend line does get lost heading into Monday session. So I will be looking at that. Now let's go over Meta. Let's take a look at what's going on with Meta. This is Meta here, and Meta has been going up a lot. Now Meta is trading at 70% melt-up operation. What that means is if the market has any green day, the stock is just going to continue to melt up and print these massive nonsensical green candles. And that's the reason why I got the team into the November 15 580 call. And if you look at the last 2 day sessions for Wednesday and Thursday, we pretty much tested 577, which is just $3 short of our strike price. Now, we did close that position with over 100% profit. And if you have not closed those positions on Meta, you can go ahead and close them for beautiful profits now and look into possibly getting back into them once we do get that sell-off. So if you have not secured those profits on Meta, you can secure them. That doesn't mean the stock can go higher. Matter of fact, if there's any sector, it will likely be Meta that will be benefiting that tech rally. So Meta is definitely strong. However, do be careful to de-risk your positions because we're trading at pretty elevated levels there. So again, looking at QQQ there, above resistance level at 484, bulls are in control, and as long as we do maintain that level of that breakout and turn it into support, I think bulls can continue to push higher on that nice double bottom on QQQ. Let's take a look at IWM. So IWM here, team, I have been watching IWM for some time, and let's take a look at IWM on the bigger picture. What's exactly going on the bigger picture? IWM is looking like a potential cup and handle team. So this is why I've been so patient on IWM here. It just looks like bulls are forming this cup and handle formation that is going to send this particular ETF into the 300s for the next 2 years. And I'm very, very excited for that because IWM over the last 4 years has been performing very, very terribly compared to the overall market. So compared to Nasdaq, compared to the S&P 500, compared to the Dow Jones Industrials, Russell 2000 has been performing really, really bad. And it could be making a change where it's very likely could be leading for the next 2 years. And the reason why is because with lower interest rate environment, rotation is going to flow into equities from the bond market and other markets, and is going to flow into equities, which are stocks. So if that turns out to be the case, small cap is one to benefit greatly because we are going into lower interest rate times. So if you know what happens during lower interest rate or higher interest rate, during higher interest rates, when the Fed is aggressively raising rates, small caps, which are the small, the small cap stocks and even the mid caps, they get absolutely destroyed. The value stocks get absolutely destroyed. Okay, team? They get obliterated, and we can see that over the last 4 years. And during now, vice versa, during lower interest rate times, they're going to benefit the best. So I think in the next 2 years, especially heading into whenever we get any solid correction, team, whenever we get any solid correction, I want to note that IWM is going to perform so amazingly. Those small cap stocks are going to, if any of you remember 2021, 2020 and 2021, we could see something like that on small caps. Matter of fact, there are some small cap YouTubers that I watch, and even myself, there have been times where I type in, like if I want to get a quick scalp trade in, I type in what are the biggest moving stocks and so forth. And the strategy is risky, so I'm not going to explain it fully. So no one really does until you get the experience. But basically, the strategy is trading small cap stocks, very, very small. Just trading off of those momentums. And I'm telling you, over the last couple of weeks, I've seen a lot of these stocks rising and rising. And it just makes me think that in the next 2 years, especially, the market is going to be beautiful. We're going to get those big, big, massive small cap runners that run 500%, 400% and whatnot. So I'm really excited for that, for the team there. So IWM just needs time, and it's going to break out very soon. Once we get above 225, just know this, okay? The next time IWM, whenever this happens, whether it be this week, next week, the week after, once IWM gets above 225, buy a call. Buy a call 100%, expecting IWM to head towards 233 and then 245. That's the targets. And once we get to 245, I'm certain we will see 260s and even 270s on a good short squeeze operation. So do keep your eyes on IWM. It just needs a little bit more time. Now, Tesla team, Tesla has been doing really, really well. I'm pretty impressed by this stock. We are breaking this downtrend on the weekly chart, and this could send Tesla this could really send Tesla flying towards the 300s, team. I'm not joking. This is a beautiful setup. The weekly chart looks very, very, very strong. The monthly chart looks amazing, as we can see here. We have a strong demand candle above the 20 EMA line, and it just looks like they're going to be breaking this level of resistance at 270s and then shooting up towards the 300s. Now, do keep your eyes out on this company because they do have a lot of projects. They have the portable houses, the boxable houses. They got the robo taxi. They got a lot of things going on. So if they can just get some momentum, if this stock just can get some momentum, it can get significant upside because it is a magnificent seven. It is still a magnificent seven, and it's just breaking its downtrend. So when a stock does break its downtrend, team, what that means is it puts an end to that 3.25 year downtrend. Okay, so if that 3.25 year downtrend ends, then we could see some very, very explosive rallies to the upside, very similarly to when we entered an uptrend here. So you see, when Tesla went back to an uptrend here, you see that downtrend line. Once we broke that downtrend line from there, we can see Tesla just went on some wild runs. Now, I'm not comparing 2019 Tesla to 2024 because 2019 was a complete different time. Right now, Tesla is dealing with some identity issues. It doesn't know if it should be a car stock, AI stock, because their cars is not doing good. And matter of fact, team, I do want to make another argument for Tesla. I have been seeing so many Cybertruck Teslas outside, a lot of them customized, a lot of them just, man, I'm telling you, I would be very, very shocked if they don't drop some shocking numbers, some very surprising numbers on the Cybertrucks. So that's another thing to keep an eye out. It could be a good catalyst because I'm seeing Cybertrucks everywhere in California. Every single where I go in California, there are many Cybertrucks around. So keep your eyes out for Tesla here. Over the next 2 years, this stock is looking ready. So if you stayed out of Tesla for the last 3 years because the AI hype was dying out, maybe you should start looking into Tesla again, especially with the break of 270 resistance, because things could finally be changing for the stock. Just wanted to put that out there for the team. And yeah, Tesla is looking good for the long term. Now, Bank of America, which is part of the XLF financials, this one looks to just be consolidating. Doesn't really look good after Warren Buffett's closing positions. Warren Buffett sold billions and billions of Bank of America worth of shares, and the stock is not looking good. So again, VXX is one of those market inverses, team, and you can see, look at the spike, team. Look at the absolute spikes when this stock does spike up. So this is what we are trying to do, okay? We're at one of those times here where we could go from 62, for example, all the way there, or this all the way that all the way this all the way there. So we could get one of those spikes here, okay? Keep your eyes out. Make sure you're hedged. If the market does show a lot of weakness, be ready to hedge, okay? Be ready to buy VXX, VIX, or UVXY, or whatever other leveraged products that you look at to hedge your positions. USO, United States Oil. I have been watching United States Oil, and the reason why I have been watching it is because China is really... China is now doing a massive stimulus, doing everything to get their economy. China is suffering from deflation, which is the opposite of inflation. And with China pumping so much stimulus into their economy, I think USO can be a good move because this will signify that the economy will be getting active again. So keep your eyes out on USO for a nice correction here if the momentum on Chinese stocks do continue. Now, Google here. Google does not look too bad, okay, team? GOOG stock had a nice rebound off of its uptrend line. This uptrend dates back to a very, very long time ago, 2 years ago, back in 2022. And so far, ever since the stock entered an uptrend, we have been maintaining this level of that support, pretty much seeing a lot of demand at the retest of the uptrend, and we saw the same thing happening this week. So now that we have seen this consolidation, I think Meta does look very, very promising. Keep your eyes out on Meta above 166.66. This one's easy to remember, okay? We're inside of a consolidation. You can go ahead and draw that zone, and you can trade it outside of that zone. All right, team? So Google above 166.78 or 166.66. This one can advance higher towards 183, the same way Amazon did. Okay, so let's go to Amazon there, see what Amazon did. Now, this is Amazon, and Amazon is already back to very close to its historic all-time highs, from all the way from 151 to 195, despite earnings being a major crash from 185 all the way down to 150. So now the same thing is happening with Google, and I would be paying attention to this stock here. So above 166, I will trade the momentum to the upside on a nice base rally towards 175 target. Now let's go to gold, see what gold is doing. Gold has been going up a lot, and we have a base rally on gold, and I think it could be exhausting. Okay, team? So pay attention to gold here. Expect some sort of pullback soon. Expect some pullback on gold soon there. If you are in long positions, try to de-risk some of your positions, because we have been going up a lot and it could start selling off soon. Netflix has been a strong leader on the XLC communications, and so far this is also looking like it's showing weakness. And this is what I mean, team. I look everywhere and I sense these weaknesses on these leading sectors, and I just don't like it. So I think for this reason, the market may be due for a pullback. Nvidia, we discussed Nvidia earlier. Nvidia is really sitting at the verge. It's either going to make the market or break the market heading into Monday or Tuesday session, depending on how bears or bulls are going to react is going to be very, very important. For those of you that were not here earlier, Nvidia pretty much broke its downtrend line, and so far it's coming back down, meaning that it could be doing a fake breakout, meaning that it fell back down inside of the pretty much the no man's land, and now bears could come in, take control, and sell it all the way down to 109. So are bulls going to step in tomorrow and create a bullish engulfing candle like that, and pretty much tell us that this is going to be the market leader and that this is going to be the breakout for Nvidia? If that turns out to be the case, and this turns out to be the breakout for Nvidia, that's going to be amazing for the market, and it can really advance the markets higher from here. Let's take a look at FSLR. FSLR, this one's been advancing higher, and so far looks to be in a nice uptrend. GDX, we already looked at gold, gold miners. This one's coming down. Microsoft. So Microsoft, another very key stock. So you see this one right here, team. I drew it on Microsoft as well. And the reason why is because this is very important on Microsoft. Microsoft is looking weak. We pretty much went from support to, okay, so this was already support. We went and we created resistance, came back down, established support at that prior support, and now we went to establish resistance. Now that we have established resistance, bulls are consolidating right here. So are we going to see a massive green candle on Monday session like that, where we come back above 435 and pretty much create a demand candle there, saying that this is going to be a base rally? Or is this going to break down below 427 on Monday session and then break the entire market down? This is very, very important heading into this this week. So what Nvidia's call price should be, it's really hard to say. You don't want to really be participating in. You don't want to be biased on one side, Mohammed, because it's not it's here's the thing. Here's the thing. If I see Nvidia getting that candle there, if we see this candle here like that, then I'm going to look at a January 17, 2025, targeting the 135 call. Okay, sound good? So if Nvidia, let's say Nvidia prints this candle, all right? You see this candle that I just drew on green on the daily chart? If Nvidia does close like that on Monday session, I'm going to send out an alert for January 17, 2025 expiration for the 170, for the 130 or 135 call. So far, so good. If Nvidia does print this candle reaction, that's the only way that I'm going to do it. If it doesn't print that candle reaction, then that would be scary for the market, and instead I'm going to stay away from it. But I am looking forward to trading Nvidia if we do get that candle. Jorge, I think Amazon's definitely overbought up here and just may need to cool off, really. I think it needs to cool off somewhat, or if bulls want to create some consolidation, they will need to step in with a big green candle on Monday. But so far, I think traders should stay away from Amazon here and wait on the sidelines. Let's take a look at Baidu. Baidu looks amazing. We just broke out, as we can see, team. The weekly chart on Baidu and Chinese stocks tell us that we could possibly get another green session in. So do keep your eyes out on Baidu, because Baidu just broke out this downtrend here, VIX. So if this is a stock that you are watching, I think it's going to be an amazing trade all the way towards 154. My main target for Baidu is 154. This level of resistance, and I think once they go there, it's going to be quite easy to break out from it, because we've already got so much liquidity to absorb. We've already absorbed it so many times, and I think there's not going to be much of a resistance up there. So this level of downtrend is coming to an end. Bulls have a massive demand candle breakout with massive volume, and I think this is going to get more upside this week. Baidu is going to get more upside this week towards 114.47. If not this week, then by next week, 114.47 would be my target on Baidu. Amazing setup. Matter of fact, I'm going to look into this for the team. I'm going to look into some long-term leaps for Chinese stocks, and I'm going to start with Baidu here. Yep, BABA Baba stock has already gone up so much, so I think it can get more upside. The next upside that I would be looking out for Baba is 119. Okay, 119 is going to be a very high probability for BABA. So keep your eyes out on Alibaba for 118.89. I think this is going to be the level of resistance that bulls are going for in the next 2 weeks. So Baba, 119.89. Okay, team. This is the next level of resistance for BABA. 119.89, the next level of resistance right there. Very achievable. Very achievable. Kroger. Now KR, I was looking at KR this week, team. It definitely looks amazing. We have a nice potential base rally there, and we are getting very close to that level of resistance. Honest to God, Mariupon, I was looking at that. And I even went through the contracts this weekend. I was looking at I was trying to look further out, but there was just not much options that. Oh, actually, they do have a lot of open interest. Wow. Not bad. Honestly, not bad. It's a good one, Mariupon. I will be looking for this one. I think this is going to see some nice upside heading into the upcoming months. This will be a good one here. We could possibly do the January 16, 2026. We could do the 65 call. Has a lot of open interest. Or I would even say we could do the June 2025 call, the 60 call. Or we could do, I would do the 60 call, honestly. I would do the 60 call for June 2025. Now, Party YD said, take a look at AMD, please. Let's do it. AMD, I'm somewhat bullish on it. Honest to God, AMD, I'm bullish on. And the reason why is because we have this uptrending market structure, and I talked about it. I've been talking about it in the last couple of weeks. AMD has been pretty much AMD started an uptrend right here, established the uptrend, strengthened it here, confirmed it for the third test. And as I said in the mentorship program, the third test is what provides the biggest opportunity. And we can see this was one hell of an opportunity. So now what's been happening is the stock got another massive correction, very, very relative to the massive move that it had, and it came down and retested the uptrending trend line there. So what did bulls do at that uptrend? What was their reaction? Well, so far they have been coming right back up very strongly, and even on the sell-off, they printed a demand candle countering that sell-off, which is a very, very positive reaction. And so far, it's looking like they're going to build some ground here to try and take out that big supply candle at 182. So the reason why I'm showing these little pullbacks here is because that's the supply, and this is where a lot of liquidity is needed to try and take out. So I think as long as AMD continues to show strength above 160s, this is heading all the way towards 207 in the next year. So AMD, I'm overall bullish, and I'm expecting this downtrend to come to an end the same way this downtrend came to an end. So this short-term downtrend that came to an end that lasted about 6 months, the same thing is happening on AMD, except this time it's much bigger on a much bigger scale and could go up much more. This could send AMD all the way to the 350s and even 400s in the next 3 years. FDX. Let's take a look at FDX. FDX is inside of this bullish channel, but I think it needs more time. It's one of those stocks where I don't like to trade Gildas, and the reason why is because it doesn't have the momentum. I've learned that as a trader, when I combine my price action understanding with the momentum trading, it very, very highly increases my probabilities, and staying out of these kind of stocks has greatly boosted my probabilities. I think it's good, don't get me wrong, but it's just not my type of stocks because I'm going against the trend. I'm fighting the trend, and I don't like to put the teams I don't like to put the team into a situation where we are depending on that kind of luck. I would like to go with the high probability setups that I know is going to really see that upside. So with FDX, I kind of feel a bit off about it. I think it needs a little bit more time, Gildas. Or if you do trade it, make sure you buy January 16, 2026 calls or June 20, 2025 calls. V, let's take a look at V. V did get that reversal. I think bulls could possibly step in again, Miss N, but it's just one of those conditions where it honestly looks a bit off. It does look a bit off, but I will say that I think bulls are going to recover back up, Miss N. I think with time over the upcoming weeks here, I think bulls are going to step in and take it up because they did get a nice reversal. Sorry, they did get a nice liquidity test right at that base rally where we previously broke out, and they stepped in with a nice demand candle and then even pushed it higher. So heading into Monday and Tuesday session, as long as you see that bulls are showing strong demand above 275, I think it can be a buy. Now, if you do buy this one, Miss N, by the March 21st, 300 call. Okay, so the March 21st, the 300 or the 305 call. You can wait for the 305 call to get cheaper. You can wait for it to go to like 4.50 or 4.0 or something, and I think that will be an amazing opportunity to catch it again. So how can the premium go down this much? Well, perhaps the stock can consolidate more here and the opportunity can be presented. It can 100% happen. A, B, and B. Let's take a look at A, B, and B. ABNB, honestly, I did see that over the weekend also, and it's right at this level of resistance where the stock broke down from, and so far it's seeing some sort of resistance level. So now what we need to see on this stock, um, who asked about AB? Christopher, what we need to see on this stock now is we need to see it go back down to 124, retest the 124, turn it into support for a higher low structure, and then come back to 131. If it does that, then I would be very, very bullish. I would buy the dip on the around the 128 area and go long from there. Now, looking at AB&B reminded me of another stock team. There are some stocks that I am watching this week, such as Lulu. If we look at Lulu here, that looks like an amazing opportunity long term. Lulu, absolutely amazing team. I really love this setup here, and I'm looking forward to uh, um, trading that with the team and making some beautiful profits in the next year or so. So Lulu, this one's breaking its downtrend, already broke its downtrend. It's already established that higher low structure. It's got that higher high structure now, and looks like it's going to get more upside this week. And any dip buys from here on Lulu are going to be opportunities for bulls to pretty much advance further higher. So Lulu is on my watch list and looks amazing. Let's take a look at Siri. I'm holding a June 20 call on Siri. I'm holding a June 20, 30 call, June 20, 2025 expiration 30 call strike on Siri. And so far, this is a good one. And the reason why I'm going to continue to hold this one is because if we look at uh, this big sell off here over the last 2 years, we are very, very far away from the home base of the moving average. So, what is the home base? The home base is trading at $52, and the stock is currently at 24. As long as Warren Buffett remains in the stock, I'm going to continue to remain in it. So, Warren Buffett has a massive, massive, massive $387 million position on series. So I'm going to continue and hold it from here. KMX, I think I like KMX. I looked at KMX on Friday. I think it will be a good one for the long term. So far, it's consolidating, but it's maintaining. Matter of fact, I got into KMX actually, Toby. I got into KMX. I got into a KMX swing, and honest to God, sorry about that, team. It looks really good. I really like KMX here. I think it's going to be a winner for the upcoming months. Continue to hold on to that trade. We have time. I think it's going to be a good one, team. Christopher, I'm gonna have to look into that. I'm gonna have to look into that. I'm not aware of that port strike, to be honest, but I am going to look into it. So, what stocks are we looking at? Provides rail-based freight transportation services. The company offers rail services and transportation of intermodal containers and trailers, as well as other transportation services such as rail-to-truck transfers and bulk commodity operations. Interesting. Okay, I see. I'm going to study those two, Christopher. I'm going to study them and then get back to you. I see. Interesting, team. I'm going to look into that. I wonder how that's going to affect the transportation sector. Walmart may take a hit. Matter of fact, yeah, Walmart is at very, very overbought levels, and I think it's time Walmart may start dropping here. So Walmart is at the top of my broadening formation there, and it should start selling off back down to 72. We will see. We will see how things go. But so far, that's about it, team. That's that. I know. I know this was a long analysis. I wanted to do a quick 15-minute analysis and end the day with it. But I really wanted to cover everything for the team so that you guys make don't make some of the rookie mistakes and trade some of these stocks that are currently stalling that shouldn't be traded. So I honestly was even going to call today's session off, and because there was really no opportunities, and I wanted to show the team there's just nothing to trade, and it's going to be one of those weeks where we will have to take a neutral approach. But I decided, you know what, a better thing to do is to get on and pretty much cover everything for the team, go over all of the leading market weights, stocks that have big weights, and pretty much show the team why the market could stall here and spend some time before trying to push higher. Are we going to get some swing trade suggestion on Discord today? Um, uh, Mohammed, usually we do on Sundays. On Sundays, we will usually get about 10 of them, usually about 3 to 5 from me, and then we would get some from Rain Bond as well. But like I said, where the market currently is, it's not promising for us to be buying some of these swing trades, and I think we should wait it out. That's why, although I do have some opportunities that I'm looking at. For example, if we go on Discord here, I have about, you see, Rainbond sent me plenty of them. Rainbond's got some really good ones. I also have some good ones here as well. I got ZM, I got GO, I got ZM March 21st, 2025, 75 call. And then I got GO 0117 2025, 20 call. I also have CVX. September 17, 2025, 70 call at 3.0. I also have ABBV. I got ABBV and my targets on ABBV. So let's go over ABBV. This is ABBV. ABBV is inside of this bullet channel, and it's looking like it's going to get an expansion towards the 213 area. Now, the only way this expansion would happen is if Microsoft breaks down. So when tech breaks down, rotation flows into the healthcare sector, and that's what I will be trading. So the reason why I didn't share these opportunities with the team, Mohammed, is because the market just honestly does not look good. The market does not look good. It looks all right. It looks all right, but at the levels we're at, we're just overbought. It looks like the market will need to somehow pull back. So looking at those stocks, it's just not looking too good. Okay, team. So I cannot see those swing trades from. Yeah, this is because I shared it in a private channel. This is a private channel that I only I have access to. No one else has access to this analysis here, and this is usually my rough draft before I make it the final draft and share it on our Discord. So I haven't shared those yet, and the reason why I haven't shared it is because I'm not entirely sure yet if we should wait a couple of days before yeah, it's a notes channel pretty much. Exactly, Red Bullish. Thank you. Yeah, it's a notes channel, and I'm just waiting for a little bit more confirmation before I transfer it to our Discord channel. Discord channels. So I do have plays. Mohammed, is just I'm not sure if I should share it with the team just yet. I feel like it's one of those weeks where we should wait it out until we get some data, until we get some reaction. And believe me, team, believe me, when we get any sort of reaction, and this is something that I really love about the market, and I've learned that over the last year and year and a half. I have really learned to perfect that, and it's that when you see markets in these conditions, just don't force yourself to try and, for example, let me put this into perspective for a second. I can just say, you know what, team? I can just say, okay, team, I'm going to alert the Go out because Go looks good, right? Go looks good. Grocery outlet looks good, but the overall market's weak. I can just send it out and say, you know what? There's a good chance it's going to go up. Well, the problem with that is that there's still some sort of uncertainty behind it, right? There's still some sort of uncertainty, and the reason why is because of market conditions. Now, let's say that instead of doing that, I say, you know what? I'm going to wait it out. I'm going to wait it out, and I'm going to see what the market does from here. And what the market does is the market will do its thing and then print a candle reaction. As soon as I see that candle reaction, I get very, very excited, and then I get into the trades that I was looking at. So a lot of times, like you guys will see me start sending out alerts in the middle of the day. Like if you go back to the older alerts, like how am I even doing that? Well, I'm pretty much just watching the market, right? I'm watching the market like WFC. We're up like 30% on it. That January 17 call, we're up 30% on it, or we were up 30% on it. And the way that I do it is like I wait for them to get a certain candle close, and then I send us into the trade. So that increases our probabilities greatly. And that's what I would like to do heading into this week. So waiting it out can really be greatly beneficial. I really encourage the team to have that kind of have that approach to just being like, you know what, I'm going to just wait this week out, and I will wait for some reaction, and I'm going to trade the reaction. And this will really, really, again, greatly benefit the way you trade. This has helped me a lot over the last 2 years. Thank you so much. Thank you so very much. And like I said, I swear, team, as soon as I sense that we are looking good and some stocks are looking good, I'm going to share them with the team. For example, you're probably going to hear me share a Lulu contract for the long term, perhaps expiring in June, and I'm really excited for that. Yes, sir. A good number of us were in here, Dali. There were about 80 of us in here this morning, earlier today. Yeah, really awesome. And I did use that time. I did use that time to make sure that I go ahead and cover all of the stocks so that the team has a good understanding and they avoid some of those stocks. Um, but yeah, team, be adaptive with market conditions, okay? Never have too many positions open at the same time. Don't be one of those traders that's going to have, let's say, 10 to 15 positions open. Never be that kind of trader, okay? Have the most you're going to have is about 5 call positions, okay? Even that is a lot. The reason why you want to do that is so that if you need to adjust it and adjust it very, very quickly and spontaneously, you'll be able to adjust it spontaneously without having to deal with too many contracts. And the problem with having too many contracts is if you are going down, right? Let's say the market's going down, right? The market is starting to take a turn. Let's say that the S&P 500 right here is starting to take a turn to the downside. If that happens and you have, let's say, more than 5 calls, then something a really bad phenomena happens. What happens is the traders are going to be down so much, they're going to be down 20% each contract, right? And because they are down 20% on each contract, they're like, you know what? I'm just going to hold. I'm down so much on these contracts and I have so many of them that I'm just going to hold. And I call that stage a capitulation stage, and it's a very, very dangerous one. Am I back? Perfect. I'm back. Sorry about that, team. I'm so sorry. Yes, my audio went away. But what I was saying is, we want to be careful. Okay, we don't want to be in that position where we are down 30% per contract and we are capitulating, meaning we're just going to leave our account there to get burnt and not doing anything and just hoping for the best. That's not going to work, okay? That's not a good long-term healthy growth strategy over the years, team. What you want to do instead is you want to be always minimizing your positions, being responsible, and only managing 2 to 5 positions at the very max, okay? 2 to 5 positions at the very max so that you can get out of your positions, you can adjust your positions, you can adapt by pretty much changing sides a little bit. You can hedge easier because if you have a very large position, right? If you have, let's say, half of your account into long-term calls, then how are you even going to hedge against that? You see what I mean? It's going to be very difficult. It's going to require a large amount of risky money to try and hedge against that. And that's just not good. Okay. So, what I mean by being adaptive is pretty much adapting with the market. As the market goes higher, you want to be de risking your positions and getting ready for a correction so that you can buy them cheap again. And when you do that, you're just going to continue to grow your account over time. If you have a minute, can you see Chewy? I have bought a January 1770 call, but it's not looking good. 70 call, that's very, very far out. Chewy, let's take a look. 29. Yeah, that's very, very, very far out. I think it's a bit risky. It's probably not going to do you well. It may lose a lot of value, so I would not be in that trade. The strike, maybe 50 call, maybe 40 call, 30 call would have been good, 35, but 70 is definitely very, very far away. DocQ, let's take a look at DocQ. Um, DocQ has been consolidating here for a long time, and honest to God, I see. I like stocks like that with me. Like if the stocks are downtrending, right? I like to buy them when they have been when they have been consolidating for that long. So for this stock with me, and that's a great one to keep an eye out. By the way, watch for a break above 65.36. Okay, above 65.36 on DocQ, this one will run up crazy fast. And I'll show you this stock is no stranger to running up hard. We can see if it does get above 65.36, I think this can greatly move higher, breaking that level of resistance. So keep an eye out on that. um, Ash, thank you so very much for attending today's session. I'm about to end today's session here as well, and I hope you have a wonderful rest of the night. Do keep in mind, team, I'm going to be in the live trading room tomorrow and for the rest of this week. I'm usually not there on Fridays because Fridays are very dangerous, especially this Friday because the market was very choppy. But you can catch me every single day, 30 minutes after the market opens in the live trading room.